Welcome everyone, and thank you for joining us today. We're here to explore the IPO investment analysis of Bagmane Prime Office REIT. On this first slide, you'll see the key details. A minimum investment of Rupee 15,000, a lot size of 150 units, and a price band between Rupee 95 and Rupee 100. The total issue size is Rupee 3,405 crore. We'll also look into whether you should apply, with full details, portfolio considerations, and our verdict. Over the next few slides, we'll dive into the 2026 IPO and what makes this opportunity worth exploring. Let's get started. Let's take a closer look at the key details of KFin Technologies Limited, IPO. Firstly, as the registrar, KFin Technologies will be managing the entire process of the IPO. The company is listed on both the BSE and NSE, which are the two major stock exchanges in India, ensuring broad accessibility for investors. The listing is scheduled for May 15, 2026, which is the official date when the shares will start trading publicly. Prior to that, the allotment of shares is set for May 4, 2026, a Sunday, which is quite common for such processes. Investors who apply will receive refunds or credits starting May 12, 2026, if their applications are successful. The anchor book, which helps gauge investor interest, opens on May 7, 2026, a Thursday, and the overall open date for the IPO is May 5, 2026, a Tuesday. When it comes to investment specifics, the minimum retail investment is 15,000, which typically translates to about 150 units at a price range of Rupee 95 to 100 per unit. The total size of the IPO is significant, with an offer for sale of 2,390 crore, a fresh issue of 3,405 crore, making the total issue size around 15,015 crore. The company has opted for a book-built IPO on the main board, which allows for flexible pricing based on investor demand. Overall, this IPO is a major event for KFin Technologies, and understanding these key dates and figures helps us better grasp how the process unfolds and what investors should watch for. This slide introduces Bagmane Prime Office REIT, which is backed by Blackstone through BREP Asia III India Holding, the offer for sale seller. What's important here is that this REIT follows a yield-first model, meaning it must distribute at least 90% of its net distributable cash flows to unitholders every quarter. This focus on consistent payouts makes it attractive to investors seeking steady income. Once listed, it will become the fifth commercial REIT in India, joining well-known names like Embassy, Mindspace, Brookfield, and Knowledge Realty Trust. The portfolio primarily owns, operates, and manages premium Grade A+ business parks, which are leased to global multinationals and GCCs, highlighting the high quality and international standards of these assets. The REIT is sponsored by Bagmane Realty and Infrastructure LLP, part of the Bagmane Group, which is one of India's leading developers of Grade A+ office spaces. Based in Bengaluru, this REIT was incorporated in May 2025, reflecting recent growth and confidence in the market. In terms of financials, for FY25, it recorded revenue of 2,391 crore and a profit of 897 crore, showcasing strong performance. The sponsor, Bagmane, brings approximately 30 years of experience in real estate development, adding credibility and stability to the REIT. Overall, Bagmane Prime Office REIT represents a significant step in India's commercial real estate investment landscape, combining reputable sponsorship, high-quality assets, and a strong financial profile. Let's take a closer look at our portfolio overview. Currently, we have a total capacity of 164.4 megawatts DC, distributed across 4 solar projects, with one of these projects actively under construction. Our solar power projects are spread across multiple sites, and we're in the process of developing new ones, with IPO proceeds primarily allocated to fund a 93% acquisition of these assets. Focusing on specific locations, in Bengaluru, we own a 93% stake in Bagmane Rio Business Park, where we've already completed 1 million square feet, with additional IPO funds earmarked for further acquisitions. Moving to the Whitefield corridor, we have Bagmane Capital Tech Park, including Luxor, which is a large-format tech campus designed to attract major tenants. In Marathahali, we operate the Bagmane World Technology Center, which is considered a premium GCC hub, attracting high-profile tenants. And in CV Raman Nagar, our flagship asset is Bagmane Constellation Business Park, which hosts major tenants like Google and Amazon. Also in CV Raman Nagar, we own Bagmane Tech Park, which is one of our key assets. Our portfolio boasts an impressive occupancy rate of around 99%, reflecting strong tenant demand. The leasable area across all assets totals approximately 19.6 million square feet, with the total portfolio area reaching about 20.3 million square feet. We focus on Grade A+ business parks, and currently, we have 6 such assets within our portfolio. Overall, this diverse and strategically located portfolio underscores our commitment to high-quality assets, strong occupancy, and growth through targeted acquisitions and development. On this slide, we see some of our key tenants, including global giants like Google, Amazon, Nvidia, and other multinational corporations. These are some of the leading players across various industries, which reflects the strength and appeal of our property portfolio. Typically, our lease tenures are around 5 to 9 years, with a 15% escalation every 3 years. This structured escalation helps us maintain steady income growth over the long term. Looking at tenant retention, we're proud to have a retention rate of 67.5% from FY23 through the first 9 months of FY26. That indicates a high level of satisfaction and stability among our tenants. Most of our new leases, about 68%, come from existing tenants, which shows strong ongoing relationships and confidence in our properties. Additionally, 91.7% of our leases are from Global Capability Centers, or GCCs, which are crucial for supporting global operations and R&D activities. Furthermore, 88.5% of our gross contracted rentals are generated from MNC and GCC tenants, emphasizing the high-quality, international nature of our tenant base. And finally, an impressive 98.7% of our tenants are actively contributing to our occupancy, underscoring the high occupancy rates and the desirability of our spaces. All these points tie back to our theme of maintaining a resilient, globally connected tenant base that drives sustained growth and stability. Let's take a closer look at our key financial metrics and overall corporate purposes. Currently, we hold a 93% stake in Bagmane Rio Business Park, which is valued at 820 crore. This investment underscores our focus on strategic assets that drive long-term growth. Additionally, we've made significant moves, such as acquiring Luxor at Bagmane Capital Tech Park for 1,420 crore. These acquisitions are part of our broader strategy to expand our portfolio and enhance value. Now, looking at the proceeds from our recent fundraise, Rupee 390 crore. These are primarily allocated towards key initiatives, including acquisitions and development projects, with a mandatory net discounted cash flow requirement of at least 90%. This ensures we maintain strong cash flow and financial stability. On the distribution front, our REIT distributions for FY25 are projected to be around 87.92%, which reflects our commitment to returning value to our investors. Turning to our operational performance, our NOI margin remains healthy, with a base year NOI of 2,237.33 crore. Our FY24 revenue has grown by 10.8% year-over-year, showcasing our ability to generate increasing income. Furthermore, our FY25 net profit is expected to grow by 6.9% compared to last year, reaching Rupee 897.10 crore, and our FY25 revenue is forecasted at 2,390.88 crore. These numbers highlight our strong financial trajectory and the effectiveness of our strategic initiatives in driving sustainable growth. Let's walk through the key steps to apply for the IPO. First, the application window is from May 5th to 7th, 2026, each day from 10 in the morning until 5 in the evening. The registrar handling this process is KFin Technologies, and you can find all the details on their website at bagmane.com. Now, the process involves multiple steps, so it's important to follow them carefully. Starting with the KFin Tech portal, which opens on May 12th, units credited will be available on May 13th. The first thing you need to do is check your allotment. To accept the mandate, make sure to do this in your UPI app before 5 p.m. This is crucial because approving the UPI mandate is what authorizes your payment process. Next, funds are blocked but not debited until the units are actually allotted to you. You can pay via ASBA or UPI, depending on what suits you best. When entering your bid, you'll specify the quantity, at least 150 units, and the price, which is set at Rupee 100, the cutoff price. Remember, this is the minimum bid. To find the IPO, simply look for Bagmane Prime Office Reit in the IPO section of your broker or bank app. You can log in through popular platforms like Zerodha, Growa, Upstocks, HDFC, SBI, Kotak, or others. Before applying, ensure you have a demat account, as it's a must for holding the units. NRI investors with valid NRO or NRE demat accounts are also eligible. As for the investor categories, QIBs or qualified institutional buyers have a 75% quota, while NIIs or non-institutional investors have 25%. Additionally, Indian resident individuals, both retail and HNI, are also eligible to apply. So to summarize, the process is straightforward if you follow these steps carefully. Check the application window, log into your broker or bank, find the IPO, place your bid, approve the UPI mandate, and wait for the units to be credited. Let's now look at some of the key risks associated with this REIT. First, there's a dependence on Bengaluru's commercial real estate demand cycle, which means our performance can be affected by how the local market evolves. Additionally, real estate is inherently illiquid, requiring a minimum hold period of around 3 years, so liquidity can be a concern for investors seeking quicker exits. It's also important to note that there's no guarantee of listing gains, as REITs are focused more on yield and stable income rather than growth or capital appreciation. Another point to consider is the regulatory environment. SEBI REIT regulations restrict investment flexibility, which can limit our ability to adapt quickly to market changes. Rising interest rates pose a risk too. Higher rates tend to reduce cash flows available for distribution, impacting investor returns. Plus, the REIT's relatively limited operating history, having been incorporated only in May 2025, means we're still in the early stages, which can add some uncertainty. We also haven't yet fully executed all formation agreements, such as those for the Luxor and Rio acquisitions, which means some parts of our growth plan are still in progress. Lastly, there's a geographic concentration risk, as the portfolio is primarily focused on Bengaluru, so we lack diversification across other regions. On the flip side, I want to highlight some of our strengths that help mitigate these risks. We have solar assets totaling 164 MW, adding diversification and enhancing our ESG credentials. Our built-to-suit model drives high tenant retention, currently at 91.7%, which supports stable income streams. We're committed to distributing at least 90% of our income quarterly, providing predictable cash flows for investors. We also have a robust pipeline of over 47 million square feet in the ROFO, right of first offer, pipeline, which is the largest growth pipeline in India. Our credibility is backed by Blackstone's institutional support, ensuring strong governance. We bring nearly 30 years of experience from our sponsor in managing Grade A+ office spaces in Bengaluru, which is a significant advantage. Our portfolio features marquee global tenants like Google, Amazon, Nvidia, and other multinational corporations, which adds stability and prestige. Lastly, with approximately 99% occupancy, We have one of the highest occupancy rates among Indian REITs post-listing. So, while there are risks, our strengths position us well to leverage opportunities and navigate challenges effectively. Please note, this presentation is for informational purposes only and does not constitute investment advice. Always consult a SEBI-registered financial advisor before making any investment decisions. Now, let's look at some key points to consider. First, this opportunity is geared towards those expecting rapid NAV appreciation rather than focusing on dividend yield. If you're looking for quick gains rather than steady income, this might be relevant for you. Second, it's important to have a demat account and a long-term investment horizon. Without these, the investment might not align with the structure and goals of this opportunity. Third, be aware of the interest rate sensitivity on distributions. If rising interest rates concern you, this could impact your expectations from the investment. Next, some investors might be expecting high capital appreciation similar to a growth equity IPO. If that's your mindset, looking for quick, substantial growth, this could be a fit. However, if you're uncomfortable with single-city real estate risk, especially concentrated in Bengaluru, or if you prefer diversification, then this might not suit your preferences. Also, if you're seeking quick listing gains or short-term trading profits, this isn't designed for that approach. Now, let's clarify who should avoid this. If you're bullish on Bengaluru's office market and excited about India's GCC growth story, you might want to look elsewhere. Similarly, if you're an HNI or retail investor wanting diversification, or if you prefer yield-driven returns over rapid capital gains, this isn't aligned with your goals. And if you want exposure to commercial real estate without owning property, or you're a long-term investor with a horizon of 3 or more years, or you're seeking stable quarterly income from grade A+ real estate, this isn't the right fit. Finally, let's talk about who should consider applying. If your investment profile matches the characteristics we've discussed, seeking rapid NAV appreciation, comfortable with higher risk, and aiming for capital gains, then this could be suitable for you. In summary, always evaluate your own financial goals, risk appetite, and investment horizon before deciding. This slide emphasizes the importance of aligning your expectations with the nature of this opportunity. Let's go over some important disclaimers first. This presentation is meant solely for educational and informational purposes. It's not investment advice, so please keep that in mind. Investing in IPOs does carry market risk, so always read the red herring prospectus carefully. And before applying, it's a good idea to consult a SEBI-registered financial advisor. Now, moving on to the key dates. On December 30th, 2025, the SEBI filed the draft red herring prospectus, or DRHP, with key players like IIFL, SBI Capital, 361, and HDFC acting as lead managers. JM Financial, Kotak, and Axis also played vital roles here. For all allotments, you can check your status on the KFin Technologies portal. If you have any questions or need assistance, you can contact them at the provided phone number, +91 80 40 30 29901, or email at reitcompliance@bagmanerate.com. Their website, bagmanerate.com, also provides useful links and contact details. Once the IPO is listed on the BSE and NSE, trading will begin, so that's a significant milestone. Listing day is scheduled for May 15, 2026, when units will be credited to demat accounts and refunds will be initiated for those who applied but did not get shares. Before that, on May 13, 2026, you can check your refund and credit status on the KFin Tech portal using your PAN or application number. The allotment will be finalized on May 12, 2026, so it's important to keep an eye on that date. Remember, May 7th is the last day to submit your application by 5 p.m., so don't miss out. The subscription window opens on May 6th from 10 a.m. to 5 p.m., and on May 5th, institutional anchor investors will bid, with the anchor book opening on May 4th. These dates are crucial to keep track of if you're planning to participate in the IPO process. Staying informed helps you make better decisions and ensures you don't miss any important steps.